major weaknesses that we have in our economy is that currently, for instance, we have 18 banking institutions, commercial 14, and then building societies and other, okay, fine, about 4 of them. Okay. But if you look at the balance sheets of these institutions, you will find that they are very small. Okay. Yes, okay, in their own right, they're okay. But when you then superimpose that on our national economy and you say, do we have strong financial institutions that we can anchor our national strategy on, that can drive our economic development, that can support industry in a very, a robust, aggressive manner? We don't.
I see.
Right? Have such financial institutions. The reason being, their balance sheets are too small.
Okay.
Right? To be able to do that. It's like a small, guy trying to lift a big boulder. Right? They can't. You need somebody with appropriate muscle to lift if it is a boulder. Or let me put it this way: if you are building a house, your corner for the house usually are much stronger.
Yes.
Right, because that's where your house rests on. That's what anchors your structure, which are the corner pillars. And this is why they are much stronger. So what we currently don't have are strong pillars for our economy from a financial point of view, where we can anchor our economic development and also our national strategy.
I see.
And this is why the merger between CBZ, ZB, and First Mutual Life is a very important strategic move at a national level. Not just at institutional level, but at a national level, in the sense that it's going to create, a financial institution that has got a strong balance sheet to be able to anchor national strategy, national economic development, and support business in a big way. We want to create a very good, strong bank. That's a banking cluster. Want to create a very strong insurance, company. And insurance company comes in terms of long-term, medium to long-term mobilization of resources, through policies and a lot of other various instruments. Okay, and then we also want to create a very strong property company institution which can drive infrastructure development together with the insurance company in a big way.
I see.
Okay, so this is where I say strategically, because that's where we are saying for the economy, we need a very strong financial institution, a very strong, insurance institution, and a very strong, property development, which is infrastructure development company.
Yes.
Okay, and hence the amalgamation, the decision to say, if outside First Mutual is the largest insurance locally.
I see.
And this is strategic.
I see.
Yeah, you want to come together with other strong, partners to create a much stronger institution.
I see.
So that's why the decision was taken to say, for insurance and property, let's go for First Mutual.
I see.
For banking, which other bank is very strong, all right? Okay, it is ZB. If you look at the net asset value of banks, the top is CBZ.
I see.
The next is ZB. I think it has progressed fairly well so far. Obviously, we wished by this time we could have completed the process, but it's more complex than some of the ordinary transactions that we have seen in terms of joint ventures or in terms of acquisitions. Okay. Because this is involving 3 big national institutions on our local scene, and each one of them with quite a number of various industries to be able to look at, or portfolios to look at.
I see.
It's not just banking. Right? You've got banking, you've got insurance, you've got properties, you've got asset management, portfolios to be able to look at. So you've got quite a good number of various portfolios to look at in all these, institutions that we are talking about.
I see.
Okay. But it has gone reasonably well so far, and we're just waiting now for the final approval, from Competition and Tariffs Commission, which we are hopeful and confident that we should be able to get it, given the strategic importance of this transaction, right, to the nation. Not just to the institutions themselves, but to the nation, and to our national development. And especially as we now begin to think about NDS2. NDS 1 next year is coming to an end. We're now thinking about NDS 2, which takes us to 2030. And in terms of our national vision, of an upper middle income economy, we are now beginning to see how do we basically strategically position ourselves and build institutions that can then support and drive that national vision of 2030. We're happy, fine, that this transaction, we should see it through by end of this year. That's the first thing. And secondly, that government is happy with the transaction, and to maintain this institution is a private institution, because all these three are private.
Yeah, sure.
Institutions. Okay, they're not public institutions, and government is happy and is agreed with other shareholders to maintain. And in fact, government is not even the major shareholder. A lot of people out there have got a misunderstanding to think that government is the major shareholder, even in CBZ.
Yeah, sure.
Right? No, it's not. It's not the major shareholder. There are bigger shareholders than government itself. But government is the key shareholder in the process, and it's because we work very closely together, and it's one of those institutions that really anchor and support government initiatives. And this is why it's important. So government is quite happy. It's in fact, it should measure out, as I say, if you end up with a 10% of an elephant rather than 100% of a chicken, you are much stronger. Shareholders may want to trade their shares.
Yeah, sure.
Okay.
Yeah, sure.
Yeah, and that's what they do. That's what shareholders do, on the stock exchange. So it will depend on the positioning that each particular shareholder would like for their shares.
I see.
Okay, we don't decide that.
I see.
Each shareholder has to decide. Okay, to say how do they want to position themselves.
I see.
Do they want to remain with 10%, to remain with 8%, and then dispose others? Okay, depending on why they may want to dispose or other, to harvest and reap some of the benefits out of the major itself. Okay, do they want to increase by possibly, buying more shares from other minority shareholders? That is up to shareholders to decide exactly how they would like to play the game. So government is currently in CBZ.
Yes.
It's around about 18%.
18%.
Yes, that's the
largest shareholder.
The largest shareholder in CBZ at this point in time. Okay, there are about two of them, almost right. Okay, it's you've got NASA, and you also have Akribos. In there. So those are the two largest shareholders in there. Okay. And NASA, remember, NASA is pension for Zimbabweans.
Yes.
So it's not government.
Yeah, of course. Yeah, sure. Yeah.
So that's why there's a separate shareholding between NASA stands as NASA.
Yes.
Because those are pensions for all employees,
I see.
right?
I see.
Public, private, whatever. So it's for Zimbabwe, pensions for Zimbabweans.
I see.
And a lot of people tend to mistake, that and confuse and think that, whatever shareholding that is held by NASA in any given company, it's government shareholding. It's not a government shareholding. Sure. Those are people's pensions. And that's why it must be protected very well, and to ensure that people are not prejudiced of their future social security. Through their pensions. We're coming together, we result in a very strong institution, right? With a good balance sheet to be able to, one, mobilize good resources, command good, share price on the market if they're performing very well, right? So we should be able to see, an increase in share prices on the market. We should be able to see a very strong institution with a very strong balance sheet and enabling them to be able to marshal resources or to mobilize the resources. And number four, the ability to mobilize or capacity to mobilize the resources leads itself into growth opportunities that they can then be able to leverage, not only locally, but regionally and internationally as well. Okay. So those are the benefits that will accrue to these institutions and through the institutions to the shareholders. As I say, the shareholders will now own institutions that have got good standing, very strong, robust, with sustainable and able to grow the shareholder value at the end of the day.
I see.
Good. As separate institutions, they are in strong positions, right? As they are. Okay. We're now going to create a much stronger institutions where we are combining two strong institutions. So the result at the end of the day is a strong institutions. And it's very important in doing joint ventures, or in doing, mergers and acquisitions.
Yes.
That's okay. We normally say the test is 1 + 1 should be equal to or greater than 2.
Okay.
Anything less than that is not worth it.
I see.
Okay.
I see.
So what is going to result, out of the merger of these two institutions, okay, of 1 + 1, CBZ plus ZB, okay, is an institution that is greater than the sum total of the two.
I see.
Fine. If we create, the two banks, bring them together, right, who are already well capitalized. Remember,
yes,
both of them well capitalized and who are meeting the capital requirements very well, strong.
I see.
You bring them together, what it does is it releases capital or resources for support to business.
I see.
Because at the present moment, right, let's take 20 million minimum capital required for commercial banks.
Yes.
Okay. So the two banks have got 20 million in the reserves, 20 million in reserves. But it's more than that in there. But I'm just giving you the minimum requirement as an example.
Yeah, sure.
Right? So they already meet those minimum requirements.
I see.
Okay? Which means both of them have set aside 20 million. If they combine and form one institution,
I see.
You are releasing the other 20 million for on lending, for support to the business.
I see.
When the transaction is completed, there will be one bank.
I see.
Banking institutions.
I see.
If we get the approval
I see.
from CTC, and this is why we are saying to CTC, we are not, preferring a strategy where the two brands run parallel competitively in the market, because then that defeats the strategic intent or the purpose for coming together for the merger. Okay. And that defeats the purpose for trying to create a much stronger institution that can support national economic development.
I see.
Because you still remain with small institutions.
Yeah, sure.
So why do it? Okay, we might as well not do it. It's not worth it.
I see.
Right. Okay. So that's very important. Okay, fine. And that's why they're coming in together. Just as I said earlier on with building society, building societies, that all banks are surrendering their building society licenses because commercial banks now are allowed by law to do the same business that building societies do.
Yes, sure.
So if you have got a commercial bank, which is a building society also, right, you then have to tie in capital, in a building society.
Yes.
It's required to have its minimum capital. The bank is required. The question is, why do it? Why are you doing it? You're just tying capital.
Yeah, sure.
It's sitting in the capital which you should be releasing for on lending to the economy.
Yeah, sure.
But it's now being tied in capital in institutions that are basically doing the same thing.
I see.
And in fact, they'll basically be competing amongst themselves.
I see.
So it doesn't make economic sense. It doesn't make business sense. It doesn't make strategic sense. So what's important is merge the commercial bank and the building society into one.
I see.
Okay, you do away with the building society license and you release the capital that is tied.
I see.
Okay,
I see.
For the building society, you then support the economy, and that's how we grow the economy.
I see.
We move together with our shareholders.
Yes.
They're the owners of the company, of the institutions.
Yeah, sure.
So that we can't leave them behind.
For sure.
And they have to approve
Yes.
every transaction that we make, every stage and our strategic intent.
I see.
So, very important. Before this was done, it embarked on. It went to shareholders.
Yeah, I see.
And the shareholders said they support.
I see.
Okay? Once we've got all the necessary relevant approvals, and when we come up with even more finer details in terms of where we are going, we will consult with our shareholders. There are issues which our shareholders will need to say yes and tick and say yes, move in that direction. Yes, they are happy because they are the owners of the company and they have the right and to know and to approve exactly what the direction in which the company is going.
I see.
Okay, which is important. Yes, they trust the board of directors, whom they have appointed on their behalf to manage their institution in the manner they want.
I see.
Because it is theirs.
Yes.
Okay. If I put it in a very simplistic way, tiriwafudziwe ng'ombe.
I see.
Right? Muridziwe ng'ombe, the owner of cattle, is the one who says, this is what I want to do with my cattle.
I see.
This is what I want to see you doing with my cattle.
I see.
Because you are just the head boy. You are just the shepherd. You're just looking after my assets. That's what we are. This is why we are stewards.
I see.
Both management, board and management are stewards looking after the property on behalf of the owners.
I see.
So the owners give us the direction they would like, or if we have got ideas in terms of where we think we can grow their wealth, because all they want is, remember, owners are investors.
Yeah, sure.
And what they want is a good return on their investment.
I see.
So the directors and management will go back to the owners and say, we are suggesting that we move in this direction, and when we move in this direction and we do A, B, C, D, this is how your cake is going to grow. This is how your wealth is going to grow.
I see.
Right? So any strategy that grows shareholder value, protects shareholder value, and ensures that the value is not eroded but restored and grown.
Yes.
Shareholders have no problem because that's what they want.
I see.
If I've put in $10, right, and you come up as a director with a strategy that is going to give me $30 at the end of the day, I'll celebrate and I'll come back. I'll support you very well. And that's basically how we work together with the shareholders, all the various shareholders, by the way, because in any organization you have got, big shareholders, you've got small shareholders.
I see.
But what is critical and important is to be able to treat all shareholders the same, irrespective of how big they are, because they are all important. Yes, they may, have, different positions. That's okay, but we treat all shareholders the same, and this is why we consult all the shareholders, and that's why we have got shareholder meetings, and AGMs where we engage with our shareholders, put across what we would like to do, what we are proposing to do, and what the likely result and how they will benefit from that. Once they give us their thumbs up, we move.
I see.
Most of the issues have been resolved.
Yeah.
Okay, fine. There are still other issues between shareholders themselves who need to be resolved.
I see.
Okay, and that's the preserve of the shareholders to discuss and resolve their own issues between them. But otherwise, as far as the transaction is concerned, it has received the blessings of all the shareholders.
I see.
It will be the largest financial institution.
I see.
Okay. The most aggressive by assets, in terms of net present assets, assets, it will be the largest. By market capitalization, most likely to be the largest institution on our Zimbabwe Stock Exchange. okay, larger than the current big boys who are there. Okay, so that's what we are creating, an institution, and more importantly, that is Zimbabwean. That's what is key and important. That we are creating an institution which is Zimbabwean, by Zimbabweans, which Zimbabweans can be proud of. And on the Zimbabwe Stock Exchange is their institution which drives the economic development. If we want to mobilize lines of credit, if we want to mobilize support from external funders, they will look at
your balance sheet.
The balance sheet. Is it a strong balance sheet? And the strength of your balance sheet determines your ability to be able to mobilize the resources. Okay, so that's very important. Okay, number two, okay, yes, it's an institution that will also begin to aggressively pursue regional expansion.
I see.
Right? So we be looking at opportunities outside Zimbabwe, across the African continent as well. And beyond that, globally, as we move along, okay, obviously it's in phases, but certainly on the African continent, very aggressive. Once it is consummated, it will move very fast and aggressively in terms of leveraging opportunities that are there on the African continent. And there are lots of opportunities. Currently, globally, Africa is one of the most, the continent that has got the highest growth rate at this point in time. And this is why the whole world is seeing opportunities, great opportunities on the African continent, both in terms of the resources, okay, as well as in terms of industrial growth, economic growth, return on investment, etc. And we would not like to play second fiddle. On backyard, in our own country, on our own continent. And so we will be moving aggressively so that we also seize on those opportunities that exist, and we can then be able to grow, our cake, and also grow our economy as Zimbabwe. Yes, there are lots of opportunities. Opportunities from an insurance point of view, opportunities, from a banking point of view, opportunities in terms of supporting ventures that are taking place right across the continent. Okay, we need to be able, once we are able to mobilize the resources, we can also move in terms of investments into those various areas which are lucrative, which have got high rate of return for our shareholders. Yes, we'll be moving quite aggressively in terms of those.